the bill, the reconciliation bill, is boosting the economy, and immigration is slowing it down, and then the effects of the tariff are both raising inflation and slowing down the economy, both businesses and households facing the drag from the tariffs.
I mean, I think about trying to compute all of these numbers with the many, many moving pieces that you have. It's a pretty complex situation. And I would imagine it changes on a pretty daily basis. But let's focus on population growth first, because that probably plays into the jobs numbers that we've been getting. And that's kind of front and center for what the Fed is going to be deciding this week. What do you see with those population numbers?
No, that's right. And the challenge for the Fed is that we have both labor demand going down as the economy is weakening, but labor supply is falling dramatically. And we have our population numbers that you mentioned look to be several 100,000 fewer each year over the next 10 years, and something like 1 million fewer this year alone. And that's from the change both in the law that was passed on July 4th, provides more money for enforcement and the wall and things like that. But since January 20th, the administration has put in a series of administrative measures that have really stopped people from coming in across the border in the way that they were the previous 4 years. And, look, there's lots of issues around that, but for the economy, it means fewer people and fewer workers.
Does that suggest that the jobs market is healthier than we may anticipate, given some of these reads? Because the unemployment rate's still 4.3%.
Yeah, that's the challenge, is that both labor supply and labor demand are falling. So the break even for the monthly jobs number has got to be much lower. It's got to be much lower.
Okay.
But still, we see lots of signs that the economy is weakening, and that that obviously the Fed is seeing that as well.